Welcome to Nerdbull1669 Weekly Outlook for the week of 6 to 10 April 2026. Okay, now before we begin, looking at the first week of April 2026, which is 1st to 3rd of April last week, it was actually characterized by the significant volatility as the market grappled with the warflation, a narrative that combines persistence, labor strength, and the geopolitical supply shocks. So while the week ended with some resilience due to the technical deep buying, the primary drivers remain the escalation in the Middle East and its immediate impact on the energy markets. So for the market summary for 1st to 3rd of April 2026, right, the index performance, the major indexes saw mixed results as investors rotated out of growth and into value and energy sectors. So S&P 500 actually finished the week near 6,578, managing a modest gain despite the intra-day swings of over 1%. So on the Nasdaq Composite, right, it actually remained under pressure, ending around 21,835. The index was actually weighed down by the big tech as rising yields and energy costs, right, threatens margins, and the Dow Jones traded flat to a slightly down, closing near the 46,542. So for the VIX volatility index, spikes to 24.85, reflecting a significant increase in the fear gauge as geopolitical uncertainty peak. So for the key market driver, the Iran conflict and oil, right? WTI crude actually surged 12.38% to end the week at $112.51 per barrel. This follows President Trump's address regarding the 2 to 3 weeks timeline for intensified action and the continued closure of the Strait of Hormuz, which has seen tanker traffic drop by nearly 98%. So on the labor market resilient, right? So the March non-farm payrolls NFP came in at 178,000, showing a labor market that remained firm. So while normally positive, this strength actually gives the Fed little reason to actually rush into rate cuts, especially with inflation risk reappearing. So on the yield curve pressure, so the 10-year US Treasury yield actually climbed to 4.36% as the warflation concern supply-driven inflation during the firm employment, right, actually forced a reassessment of the 2026 rate path. Okay, so now coming to the market outlook for the week of 6 to 10 of April 2026. So the upcoming week, right, is expected to be one of the most critical for the second quarter as the focus now shifted from the geopolitical headlines to hard inflation data. So on the key economical data releases, so on Friday, 10th of April, we are expecting the CPI Consumer Price Index for March. This is the make or break print for the week. So market are actually bracing for a potential hot reading, driven by the recent surge in the energy and the transportation insurance costs. So on the April 8th, Wednesday, we are expecting the state employment data. So while secondary to the MFP, the non-farm payroll, this will actually provide an insight into whether the high energy costs, right, are actually beginning to impact the regional business operations. Okay, so now coming next to the geopolitical and energy watch. The market is currently pricing in a 2 to 3 weeks window of high tension. So any headlines, right, regarding the Strait of Hormuz, either a further blockage or a surprise de-escalation, right, would likely cause a 500 to 1,000 point swing in the Dow Jones and the Nasdaq. So do note that if the oil sustained level above the $115, right, expect a broader risk-off rotation into the defensive sector like the utility and the consumer staples. So on the technical outlook, right, on the support level, analysts are actually watching the 6,500 level for the S&P 500, and then a break below this, right, could spark a broader technical selling. So on the sector rotation, we need to look for continued strength in the energy and the aerospace and defense, conversely, right, semiconductor and software names may remain volatile as investors weigh the impact of a higher power cost on the AI infrastructure. So for this week's strategy focus, right, with the CPI release falling on Friday, expect the wait and see behavior early in the week with a low volume, high volatility trading. Appreciate if you can like and share this video if you find this video useful and helpful for you. Thank you for your support and we look forward to you supporting the channel for more content. Heading into the week of 6 to 10 April 2026, right? The macro environment is dominated by a transition from the growth at any price to a inflation protection at all costs. So the primary narrative is warflation, a scenario where the geopolitical conflict in the Middle East actually drives the energy prices higher, while the domestic labor market remain too strong for the Fed to ease basically the interest rate. So macro snapshot for 6 to 10 April 2026. So the risk appetite, we're looking at selective defensive. So current sentiment risk off cautious. Investor actually are favoring the liquidity over real assets over the high multiple growth. So we are looking at So looking at the behavior that we are saying a sell the rip mentality in tech and also buy the dip in energy and defense. So retail sentiment has actually cooled significantly with a notable shift towards the money market funds and the short-term treasuries. So safe haven flows, gold and silver remaining beat, but the US dollar, right, DXY is the primary beneficiary at as it acts as both a safe haven and a beneficiary of a higher for longer rate expectations. So for the rate direction, the higher for longer resurgence, the treasury yield, the 10-year yield is actually trending towards the 4%, 4.4%. So the narrative of a June rate cut has almost entirely evaporated, with many desks now pushing the first cut to the second half of 2026. So for the Fed outlook, right, the market is actually pricing in a hawkish pause, while the Fed wants to cut to support growth. The oil spike, WTI at 112 plus, so acts as a functional tax on the consumer, complicating the inflation mandate. So on the fixed income strategy, right, the tide of war continues raising yields are hurting long duration bonds. So, but the credit spreads remain surprisingly tight, suggesting the market does not yet fear a full-blown recession, only a persistent inflation shock. So, okay, coming to the volatility regime, right, it's high gamma, event driven. So for the VIX status, the VIX is in the high volatility regime, currently holding above 24 level. So characteristic is the intraday swing, expect a gappy open and close. 1% moves in the S&P are becoming the standard daily range rather than the exception. So for the skew, right, there is a heavy demand on for the downside protection puts, particularly with the CPI print on Friday, 10th of April. So correlation, right, asset classes are actually moving in lockstep, while the oil spikes, both stocks and bonds, right, are actually selling off simultaneously, breaking the traditional diversification benefits. So the wildcard variable. So the Strait of Hormuz remain the single most important technical level in the world right now. So any signs of a reopening would likely cause an immediate relief rally in equities and a collapse in the oil prices, potentially dropping the VIX back towards the 18 to 20 level. Until then, the volatility regime remains defensive. So for the week of 6 to 10 April 2026, right, the market is actually navigating a high stakes environment where the technical levels are actually crashing with the warflation fears. Below if is the technical breakdown for the major indices, right? Basically, we're looking at S&P 500 here, and also Nasdaq, and the specific stock that we're looking at. Okay, so for the S&P 500 weekly outlook, right? The S&P 500 is currently the trend continuation and the pullback risk. The S&P 500 is currently testing the limits, right, of its long-term bullish channel after a 7% retreat from the recent all-time highs. So we are looking at a trend continuation level, right? A weekly close above the 6,620 is required to signal that the recent deep buying has enough momentum to challenge the previous highs. So for the pullback risk level, the 6,500 psychological mark is the line in the sand. So the risk is a sustained break below the 6,500 level, right, will open the door to a formal 10% correction, targeting the 6,340 to 6,380 zone. Now coming to the weekly outlook for Nasdaq, looking at the strength versus the failure. So technology remains the volatility leader. The index is actually battling a heavy structural ceiling, right, that has rejected the price action multiple times since the late 2025. So for us, the strength above 22,000, sustaining the price action above this level, right, actually indicate the institutional accumulation is actually offsetting the energy related margin concerns. So for failure below the 21,650, if the Nasdaq fails to hold this recent swing low, it validates a lower high pattern on the weekly chart, suggesting a deeper slide towards the 20,800 support area. So now coming to the weekly levels for Delta Airlines, DLA. So we are looking at a bullish above the $65.50 as it clears the recent leadership change uncertainty. So invalidation below the $62.80, right, would suggest that the few costs, are winning. So for us, we're looking at a bullish bias above the $66.50 and an invalidation of below $62.80. So now coming to the weekly level for Rocket Lab, RKLB. So RKLB need to reclaim the $74 to negate the recent breakdown from its trend channel. So below the $67.50, right, the sell signal remains active. So for us, we're looking at a bullish bias above the $74 and an invalidation below the $67.50. Now coming to the weekly levels for Virgin Galactic SPCE. So SPC must break the long-term moving average at $2.49 to $2.55 to confirm a reversal. So a drop below the $2.36, right, will confirm a falling trend. So for us, we're looking at a bullish bias, right, above the $2.55, and for the invalidation, we're looking at below the $2.36. Now coming to the weekly level for Tesla TSLA. So for the Tesla, a bullish bias resume on a break above the $450 level. a heavy call interest zone. Invalidation will actually occur on a weekly close below the 400 structural support. So for us, we're looking at the bullish buyers above the $450, and then for the invalidation, we're actually looking at the below $335 level. So a bit of the risk management framework. So these are the three things that we should always keep in mind. So trade levels, not the opinion, and we should define the invalidation before we entry, and then also reduce size during the consolidation. To practice discipline and patience with. So this video is actually for educational content only and it's not financial advice. So the disclaimer, so the analysis and the result actually presented does not recommend or suggest any investings in the state stock. So this is purely for analysis purposes.